Simplicity is the outcome of technical subtlety. It is the goal, not the starting point. Maurice Saatchi. My friends, we strive every day to keep things simple. Why? Because all we care about is accurately judging price movement. That's all we care about. We don't care what the news says. We don't care what the market reports are, what the Fed says. We only care about price movement and how what they say affects that. But we tune mainly into these indicators. And again, we'll use information to help us, absolutely. But it is primarily what's going on with price. And of course, we use these Heikin-Ashi candlesticks, the volume. And let me get there we go, get it a little brighter. We use Heikin-Ashi candlesticks, we use volume, and of course we use our trend lines. And we can see this week starting off, popped up in the morning and then pulled back some in the afternoon. For the day, it's only up 0.21%, but these Heikin-Ashi candlesticks are showing us this market after slipping sideways for a couple of weeks. Last week, gaining a little momentum with some down movement there. You can see that wick on the bottom, but taking off this week. We'll continue to watch the volume. The last volume, the high volume we had was all the way back on December the 11th, the week beginning then. But you look at this two-day candle, look at all that volume representing Friday and Monday. And you can see where the peak of it was there on Friday afternoon. And then decent volume, a little below average on both morning and afternoon on Monday. But look at all that. That's the highest volume we've seen going back many, many months on the two-day chart. And again, we had average volume with it, a doji there, and then taking off again. Average volume here on the weekly, of course, back on the 2nd of January, the week beginning then. And then the market relentlessly pushes higher and higher. What about the NASDAQ 100? It was only up 0.13%. Heikin-Ashi, though, shows us the average pace. Average volume last week. Look at that super high volume again on the two-day, peaking out, popping up in the morning with average volume on the half day, rolling back some in the afternoon with low volume. We'll see how tomorrow goes, how this market continues to move. What about bonds? Bonds up some for the day, 0.60%. Starting the week off with a red down candle, not hitting that low last week with all that volume. This red means, of course, going from red to green. Red means that you're opening lower than the prior close. Green means you're opening higher than the prior close. So that's all that means. There is no indicator of up volume or down volume. It just shows you the volume, but we have it colored that way depending on the opening of the candle to help us see a little bit more. You can see the volume here is lower than the prior two-day volume. That was Wednesday, Thursday of last week. This is Friday and Monday. Friday of last week, Monday of this week. We can see things popping up in the morning, leveling off in the afternoon. Price is still below that weekly trend line on the two-day and the half-day. So we'll see as bonds shape up how they move this week. Gold down 0.38%. Going into the third week, not reaching the low of last week yet. Not a lot of volume here getting us excited about gold's direction. And of course, one thing for those of you who follow charting cryptos, commodities, and currencies that we do like to pay attention to is GDX. And I thought I had that under commodities. Where have I been following that? I could have sworn we were, but anyway, we can stick that in. I know, it's on the three-wave trades. But GDX, look at gold miners. You can see how they're, again, accelerating down. They're down now 4 weeks. And as we move our trend line, we have to actually sharpen it up because it's going down even more as this week starts. So what does that tell you about what's going on with gold? Well, I've been mentioning that it's important to find things that can be helpful indicators. And of course, as we see gold miners sharpening their down move, just pay attention to how that may or may not reflect, may give you some heads up on what's happening with gold itself. But again, down a little bit for the day, 0.38%. And of course, we didn't have any peak volume, any peak turnover here. We just didn't have that happen. So again, we saw where things peaked here, but it actually went higher after November the 27th. Decent week, but of course, what have we been talking about the whole time? This has continued to be a ceiling, this purple line, and we're rolling down off of that. For us to get any really solid up moves in gold to be sustained, we're probably going to have to go above it. Well, we are going to have to go above it. Let's look now at Bitcoin going to the second week of down movement, down for the day 2.98, almost 3%. Look at all the volume last week. Look at that peak volume on the topper and then rolling over, heading down. So again, want Bitcoin to pull back quite nicely and then give us a good trigger now that we're starting to see a better pattern in Bitcoin. Remember how hard it was last year to track that? We want it to be trackable this year, so we know the next jumping in point for a successful practice trade. Hasn't been easy on Bitcoin. That's where we are, folks, as we start Monday. I always love to hear from you. CW@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.